Cambridge International Examination, special journals or books of prime entry. We are discussing a question in which purchase journal, purchase return journal, sales return journal and journal all will be prepared in just one problem. This is for the students of accounting, equally important for IGCSE, Cambridge and Board of Intermediate Examination. Let's start. Miss Luna began trading on 1st February 2022. Her transactions during the first month of trading were as follows. The month of February, on 1st February, she started business with cash, bank and furniture. This is her investment. Bought goods on credit from Hunain, amount is given. Paid rent, paying by check. Sold goods for cash, sold goods on credit to William. Purchased goods on credit, purchased stationery, returned some damaged inventory, sold goods to Khizr, William returned goods, purchased vehicle on credit, sold goods on credit to D'Souza, check received, paid by check, purchased goods, returned goods and returned goods. Record the above transactions in sales day book, return outward day book, purchase day book, return inward day book and journal. We have to decide which transaction is to be recorded in which book. So let's have a conclusion or a decision about recording the transactions. The goods which are purchased on credit will be recorded in purchase journal. The goods which are sold on credit will be recorded in sales journal. If the purchased goods are returned to us by the customer, they will be recorded in return inward journal. If we are returning goods which were purchased by us, they will be recorded in return outward journal. The transactions which will not be recorded in any of these four, sales, purchase or return inward or return outward journal, the transactions other than these four books will be recorded in journal. So this is how we had categorized, first of all, which transactions are to be recorded in journal, which are to be recorded in purchase journal, which are to be recorded in sales journal, return outward journals, return inward journal and journals. Before analyzing this question, you must have seen the first two problems, problem 1 and 2, in order to have a better understanding of this question. Let's record in the purchase day book the transactions which we have marked as PJ. Transaction of February 2, 7th and 26. In these three transactions we are purchasing goods on credit and we know that purchase day book is particularly prepared for purchase of goods on credit. Invoice numbers not given in the question. We'll assume any purchase ledger numbers. Amounts will come here. In the end, we'll write the total of purchase journal and we'll mention here that this is the amount which will be transferred to the purchases account on the last day of this month, that is the 28th February. Let's prepare the next one, return outward journal. In this journal, only those goods will come in which we had returned the goods to in which the returns are goods to the supplier. This is ROJ, return outward journal, in which we are returning goods to the supplier. This is ROJ, in which we are returning goods to supplier. Both times we are returning goods to Hunain, our supplier, on 27th and on 12th. So let's see 27th and 12th, two recordings, amounts are given. Let's write the total, rule of the journal. Mention here on the last day of the month, transfer to return outward account. The third book, sales day book, only those transactions will come in which we have mentioned SJ, sales journal. Whenever we had sold goods on credit to customer, those transactions will be recorded in sales journal. That means February 6, February 14, February 20th, and that's it. In sales day book, three transactions, we had sold goods to three customers. The amounts will come. We'll mention their SL, sales ledger numbers. The dates will be written. In the end, we'll write the total and we'll mention here on the last date that the amount is transferred to sales account. Fourth book, return inward journal, will be mentioning here that the transactions in which return inward journal is mentioned, where the customers are returning goods to us, that means on 15th February and on 28th our customers are returning goods to us. These will be recorded in the return inward journal. The goods are coming back in our shop, they are returning us the goods, that is why it will come in the return inward or sales return journal. After entering the transaction, we'll write the total. The total is mentioned, and we'll mention here that the amount is transferred to return outward account on the last day of the month, that is February 28. Now comes the last thing, that is journal. We'll be looking at all those transactions in which we had written GJ. We can simply say that transactions which are not recorded in any of these four books, will be recorded in journal. Investment, purchase of goods on cash, purchasing stationery, purchasing vehicle, receiving check, payment to supplier by check. All these are the transactions which will not be recorded in any of these four specialized journals, therefore they will come in journal. We can have a look on journal. This is a compound entry. The owner is investing cash, bank and furniture, that will be debit, and the capital of the owner will be credit. Rent is paid by the owner, rent expense debit, rent is paid in check, bank credit. Sold goods for cash, cash debit, sales credit. Purchase stationery is called office supplies, that's an asset, debit, paid in cash, cash credit. Purchase vehicle from George on credit, vehicle debit, George account credit. Receive check from William, bank debit, William account credit. Paid check to Hasnain, trade payable debit, bank credit. So this is how a proper specimen of journal using date, details, folio, debit and credit columns will be prepared and transactions will be recorded. A page number can be assumed for journal, and the complete recording of transactions will be done in journal. Like, share, subscribe, Commerce Lecture